All right. Well, good evening, everybody. Hopefully, you're not too tired by now, but lots of great information. Michael, who's just presented before me, I've done a lot of podcasts with him. So I'm pretty sure just from the things that I've seen him do and just even going to his website, seeing some of the work that he's done on his YouTube channel, definitely something that you guys can definitely take advantage of and hopefully use that to your advantage. One thing that I think is that, with all these multiple speakers that we all have different styles and different strategies on how to approach the market. So definitely pay attention to each and every one of these people and figure out which one of them really suits your style of trading. For me, when I heard about today's topic, I was super stoked, super stoked. And the reason why is anybody who knows me knows that I am a long-term trader, long-term investor. I love long-term more than anything else. Okay, so today this fits right into my alley. And so at the end of the day, I do have some things to offer you guys. So please stay to the end because at the very end, I'm going to offer a very, 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 very special deal to everybody on this call. All right. Quick disclaimer. I'm not a financial advisor. Please understand that. Do I do trade the stock market and I teach what I do know? That's just what it is. I'm not a financial advisor, so I don't recommend what to buy, what not to buy. More so just teaching you the strategies that I'm using for long-term especially, and how this might eventually hopefully help you too as well. So please keep that in mind. If you don't know who I am, I'm a technical strategist. I have 17 years in accounting, finance, and investing background, including 8 years of technical analysis and I think about 4 or 5 years now of quantitative analysis. My thing is I try to focus on, I took my accounting background and how I use that to analyze financial statements, and I transferred it over into the stock market to try to see how I can use charts, technical analysis, and quantitative analysis to come to pretty much the same conclusion as what fundamental analysis would have done. The only difference is that it does it faster and more accurately. And that's kind of like what this does. So my goal is to only focus on good companies, making sure that we're buying it at good prices, making sure that we minimize our risk as much as possible. And I want to also know what is the profit potential, a good profit potential before I get into these stocks. And I figured out how to see all this without having to scroll through and calculate all these financial statements, but I can literally see all that in charts. The other thing that I do well is be able to stay on the right side of the market, which is why our company is called Right Side Trading. The goal here is to make sure that we are anticipating what's going to happen going forward, not necessarily always talking about stuff in hindsight, okay? Because in order to make money, we have to position ourselves to make money as the future approaches. Does that make sense? Some of my notable calls is I called the crypto crash back in January that this was going to happen. I even did a video on that on YouTube that I posted saying this was going to happen. And by the way, I'm not one of those prima bear type of people that would tell you, oh, everything is very, 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 and then one day finally does. And I said, oh, see, I told you that. Now, anybody who knows me I was super bullish in the market up until this year. And I said, wow, okay, things are looking different. And so what we were able to call the crypto crash that back in January. Also in January, we called the market top. In January 2020, before the pandemic really became an issue that everybody is now aware of, we saw the top then, and we actually talked about that too as well. Also, when the market hit bottom in March of 2022, during the pandemic, we saw that, we called that too as well. And for those who might be willing to go all the way back to 2018, when the whole tariff war was taking place between China and the United States, if you remember Christmas, the day after Christmas, market hit bottom because we were in a short bear market that ended December 26, 2018. And we saw that too as well. We called all those based on the things that we've learned. And then I'm going to be showing you guys here today. Okay, so that's kind of like what we did. Just a few examples. I do have a report that I send out every week. And here is the report. Here's an excerpt of the report back in January of 2020 when we talked about the pandemic top. So this section right here was taken out of the report, but over here you can see where it says the writing is already on the wall. It is time to take profit, exit positions. The market is warning us to take heed. So we wrote this back in January 24th of 2020. And then 2-3 weeks later, the market went into the pandemic that we all now know. A lot of people started actually investing in the stock market after this pandemic took place. But we were able to see that back in January before the plunge took place. I've had people ask me, hey, would your system have been able to tell the pandemic? Because nobody saw that coming. I said, oh yeah, we actually did. We actually did. And then you'll see this is the same report back in March. And under the excerpt of this, I wrote back then on March 27th, it says, the question is, have we found the bottom or is this just a relief rally? Here's the answer. Just like the bearish signals that warned us of the top, this time the market is communicating it is time to cover all our short positions, which means get out of anything that you shorted. Make it very clear again, exit your shorts and get ready for a rally. And that's kind of like what we saw. And you go back, you'll see March of 2020 was when the market bottomed and then it went back up. Now, we wrote all this while it was happening, not in hindsight, but while it was happening. So the new question I always tell people is like, you gotta wonder, is like, was that luck or what is it that we saw that helped us to see this? Here was the same report in January of this year when we started talking about Bitcoin. And it says, the more we zoom out, the clearer it is becoming that Bitcoin is displaying major topping patterns. This is going to look ugly. This is not good. And you can see the tonality of how I write. Like, this is not one of those days where I sit on the fence or I say, well, maybe it's going to do this, maybe it's not. It's like this. There are times where I'm like, Mom, this is bad. Like, and again, this is before all this started happening, because again, you can see here's a snapshot of that January 7th of 2022. What that weekend was when we were writing this. It's like, wow, something bad is about to happen. Something bad is like it's going to look so ugly. Chances are now very high that Bitcoin is going to suffer for the next 4 to 9 months. And then because of how adamant I was about it, because of the warning signs that I saw, I actually did a video because I said, you know what, people are not going to believe it. And the reason why I did that was during that period of time, you could not tell any crypto trader to get out of the crypto market at that time. Like, any warning that you gave at that time was just going through deaf ears. It was kind of like what Alan Greenspan said when he said irrational exuberance, right? That was what was going on. And yeah, I was trying to shout to people, say, hey, get out, get out, get out. But it was the noise was so much about cryptocurrency that nobody wanted to hear. So I said, you know what, let me go create a video, because I usually don't do this. I said, let me create this video so I can timestamp this, because people are going to come back in the future and say, oh, nobody saw this. Nobody could have known that this was going to happen. Oh, it affected everybody. And I was like, no, there were warning signs. We talked about it. And then now here's where it is today. We can all see what's happened to crypto's market, right? Some of them dropping 50, 60, 70% in value. But in that recording, which you can find, it's still posted on YouTube on our YouTube page, which is called Right Side Trading. You'll see the video. It's not long. It took just a short excerpt. And I said, this is going to be bad. And I stay away from buying any Bitcoin or cryptocurrencies out there. Because from what we see, it could take 4 to 9 months before things turn around. And it was interesting because I literally had people come back and say, oh, you don't know what you're talking about. And then here we are. And then now, once again, the data that we follow has been proven right. So the question is, what is this data? Here's the market top that we talked about in January as well, where it says we are prepared for a bearish drop that can be what? Significant, lasting for weeks, if not months. See, when you write like this and you're so adamant about the way you write stuff like this, these are not, oh, I think it could happen, or I hope it can happen, or I wish it could happen. This is like, wait a minute, things are happening. Like, wow, it's like almost like a shock. It's like, what is this? Oh my God, it's just like, do everybody else see this? That's the kind of like, clear information that you get to see and learn when you understand how to analyze markets the right way, okay? But topping patterns are beginning to appear everywhere. And so here's part of that report. And then in February, I gave them even more. I said, based on what's transpired on Friday's close, there's even sufficient and mounting evidence that the markets are in trouble. Now, this was in February, warning people, the signs of a bearish market is undeniable. The only question is, how long is this going to last? But there was no question that in January, the warning signs we saw were telling us this was going to happen. And so this is where I tell people, I said, look, what was it that we saw? How did we see these things? And it's not just we saw it one time. We saw it in the pandemic. We saw it at the bottom of the pandemic. We saw it in cryptocurrencies. We've seen these things and we're writing about these things while they are happening, not in hindsight. Okay. This week, literally what's today? Today is Tuesday. So this weekend, 2 days ago, I wrote this to our subscribers again. I said, look, when markets rally on bad news, it means that institutions are bullish. This has been the case in the past few years. For now, on the daily chart, we are expecting the market to rally. What has been happening to the market since this week has began? Markets rally. Today was a very good day in the market. I actually talked about this in my webinars that I do on Monday nights, telling people, I said, you got to expect this. This is what's going to happen. I need to be clear though, even though we have this, big picture still shows that we're bearish. I'll tell you that. All right. But we said we are supposed to expect a rally in the market that is going to last for a few while, but it's not getting us out of the bear market yet. At least the data right now doesn't show that. There's no data that shows that we're out of the bear market yet. But most people might get confused that, hey, just because we have a rally in the bear market, everything is fine. That's not the way we see. We just don't have the evidence yet. We don't have the data that shows us that we're out of the bear market as of yet. Okay. So what are the tools that we use to see and stay with long-term trends? Because my thing is I like to see long-term. I was talking on the podcast yesterday, and I told him, I said, look, from what we see, the data shows that market is not going to recover before the end of this year. And unless something changes, unless we see new data that pops up between now and then, based on the data that we see right now, okay, we can't predict the future and what data we're going to see in the future, but based on the data we see right now, it shows that we're going to see the markets lower by the end of this year, even to the extent that it could last, maybe even up until 2023, 2024, based on the data that we've seen. And it was like, wow, okay, that's very, very interesting. But for now, we'll just take it 1 month at a time, 1 week at a time. If there's new data that surfaces that tells us otherwise, we'll adjust accordingly. But until then, we don't. But the benefit of what we have is we're able to see long-term. And my research has been in quantitative analysis, technical analysis. And what we did was we took all that together and we put it together into a platform, a software that we call the Right Side platform, right? And this Right Side platform is what we use now to kind of help us to see things and all that kind of stuff. So let me show you a little bit. I'm gonna just display it. I'm not gonna go into too much details. I'm gonna just show you examples after examples, because again, at the end of this presentation, I'm gonna invite you guys to come join us if you're interested in some of the things that we do, so we can show you and teach you more about how to see the market. But for now, let me just do this, okay? So here is the S&P 500. This is the platform. Two biggest things, or just a few things that I would like to highlight here, just so you can see. First is you'll see a green background and a red background. The red background just tells us that we bearish. The green background tells us that we bullish. You'll see that we're in the green background, market rallies. We're in the bearish background, or the red background, market drops. So we made that color coded for my kids in particular. I have a 10-year-old and an 8-year-old now, where they can easily at any point in time see what is the market doing. So if somebody was to come to you and say, oh, the market is bullish, I say hogwash. It's not, it's bearish. My kids can tell you that. How? I can just look at the color code right now. It is bearish, right? Now, this is a monthly chart. We can do this on any time frame, pretty much. Well, actually, I shouldn't say any time frame. We do daily, weekly, and monthly, all right? The next thing is this rank model. This is where all the work that we put in, this is where our quantitative and technical analysis, our own model that we put together, this is where it takes the very last candle, or each candle, it takes each candle and kind of tells you what to be paying attention to. So you'll see right here in January, when this was happening, it says, hey, wait and hold. By February, I want you to see what that ripe model was saying. I'm going to circle this again, and I want you guys to see this. So in February, notice what the right model was saying. It says get insured, meaning that you need to insure yourself from what is about to happen or get out of the market. And then you'll see here in March, it's like get out of any long position. Or place a stop on any long positions that you have. And then it turned bearish, right? And then again, it's saying, look, this is your last chance to get insured or get out the market. And now it's telling you exit. And this is what we see now. Now it's telling us, look, sell short, because this market, even though today did pretty well and stuff like that, is looking at things long term and saying this is a market that could easily be going down. I want to show you this example here because a lot of people's like, well, if the S&P is not doing well or the market's not doing well, well, cryptocurrencies is where you should run to. That's where your money should be. And again, this is where I can say, hey, when this started happening, right here in December, we got our first warning sign to get out of cryptos. And then come January, this is what I saw in January where it says sell short. And that's one of the reasons why I wrote about this report. It's like, wow, that's huge, because this is a monthly chart now. Not only did the background change from green to red, but now it's telling us to sell short. I said, you do not want to be long on cryptos right now, ladies and gentlemen. Please do not. Okay. And this is where people are, oh, you don't know what you're talking about. Blah, 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 blah. We have 2 months where it seems like, it's almost as if the market was giving us, ample time to say, get out. Like, notice what it says, exit your long position, exit your long positions. And then it started dropping. Now what it's telling us is wait and hold, meaning that, look, there's no data, there's not enough data that tells us that it has hit bottom, is ready to go back up yet. Right now, it's just saying, stay short, or if you didn't short it, wait before you do anything else. So then people thought, well, if cryptos is not where the money is, we should go into gold. And I said, well, you might want to think that again too as well. Because again, all this is long-term. So we're looking at the next 3, 6, 9 months kind of situation. What is this kind of trying to tell us? And you can see right here, there was warning signs here with this long wick right here. We can see it says getting short, get out in May. In June, gold is telling us you need to exit any long positions that you might have on gold, any long position. So we started telling, our followers and subscribers, look, gold is not the safe haven that you think it might be, unless if it's a situation where you say, okay, gold is not going to drop as bad as the rest of the market. I used to have this notion that when they say, okay, go to the safe haven stocks, it means that, hey, you'll be safe there. Like you won't lose money there. And not necessarily. That's not what gold is telling us right now. And I've learned since then that it's not that you won't lose money. Maybe you just won't lose as much as the others, but the chances of you losing money are extremely high. And so gold is not a safe haven right now because I can see this. And now it's just turned into a sell signal. And I was like, ouch. And we expect gold to go down. I think the first target we anticipated was like around 130 or something like that, 138, 130, 140, 138. So somewhere between here and here is what we expected. And so it's, gold is not the place to go hide. Then some people say, well, if they're taking all this money out of the market, where are they putting it? Maybe it's in bonds. And I say, well, let's go take a look at the chart of bonds long term. And we're looking at charts of bonds long term. And the same thing, it's like, nope, this is not where you should be investing your money either. Bonds is not where you should be. The 20-year treasury, this is what it's been doing. And notice this is 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months. And treasury has been going down for 7 months. Now, you take that all the way back to over here, it's been going on since last year. Actually, probably longer than that. And so this notion of, oh, let's go invest in bonds to be a safe haven, or go invest in gold or get cryptos, hopefully you can see that long term, none of these are telling us this is crypto, this is gold, this is bonds right now. None of them are telling us that it's safe to invest our money in there. So you might start thinking, well, if none of them are safe, what do we do? Well, this is where you learn how to either short the market, or at least I need to be staying away from these things for now. Real estate. Real estate was another one that I hear people, oh, well, real estate is not being affected. and all that kind of stuff. I said, well, maybe it is, maybe it's not. All right, let's go double check this. And I'm looking at this. And again, real estate was doing pretty well up until January. Then it told us get insured or get out, place stops in your long positions, get insured or get out. And once this turned red right here, it's like, this is not where you want to be. And now it's also telling us to sell. It's almost as if the market is trying to tell us sell. So this is where I keep on telling people, if the S&P is going down, eventually now the real estate is going down, or at least sell signals are happening on real estate, sell signals are happening on gold, sell signals already been happening on bonds, crypto has already been falling apart all this time. And people still thinking, oh, everything is fine, it's going to bounce back. I said, no, everything is literally falling apart. Everywhere you look, everywhere you turn, things are falling apart, except for a few places like this, right? This is the dollar, okay? Now, the dollar's been doing really well. How do I know the dollar's been doing really well? Well, first of all, we can see that it's trending higher, but also what we can see is that the background has turned green and it still hasn't turned anything else, you know? So all this has been going up. Excuse me, at this stage, people are like, oh, should we jump into this? Should we jump into this? Long picture, just saying wait and hold. Hopefully you got in sooner than that. But at the end of the day, you know what? Yeah, money is doing well in the dollar. So that's one place. Another place that is doing well right now is oil. Okay, oil stocks is doing pretty well right now. And you can see this too right here. Notice how we had our buy signal since April of 2020, and it's just been doing well ever since. I mean, it's just been staying bullish, 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 bullish. And you would notice right here it says wait and hold. Part of the reason why it tells us that long term, because it's like, look, we expect you to have already bought down here. Now, trying to jump in at the last minute here might be too risky. And so this is what this platform helps us with. And this is one of the tools we just kind of like use to kind of help us see, hey, things are still looking good or things are not. I heard somebody say biotech, you know, money's flowing into biotech. You know, I said, okay, good. I wasn't aware of that. But fortunately, I was able to go to biotech and I took a look at the chart and I said, well, doesn't seem like money's flowing into biotech. How do I know this? Because the whole background is red. And you can even see, I mean, this stock was up here at around 80. Now it's trading at $80. Okay. So it's important that we don't just assume things. It's important that we actually see what is going on. And so if somebody came to me and said, hey, should we be buying this? I said, well, let's see. Right now it's saying wait and hold. Let's just wait. So I won't necessarily want to go out there and take all my money out of S&P and start dumping into this because we think and feel and hope that things are going to get better. I would rather wait until we get that buy signal before we do anything. Just like how we had the buy signal here that told us, yes, go ahead and jump into this. I'm not mentioning any names, but here is ARK Investment. And again, I mentioned this because I remember when this stock was doing really, really well. Everybody loved it. It was doing really well. We had a buy signal down here saying that we should get in. Things were going great. Notice what ended up happening was once it started reaching that top, it says wait and hold, wait and hold. And then it said, you might want to start placing stops on this. There's a reason why this is. And this is what technical analysis, quantitative analysis does. Is like it's seeing that money is not flowing in anymore. So it's like, see, there's a little bit more money flowing out than it is flowing in. And it says, you might want to get insured. Now, you might ask, what does it mean to get insured? Get insured is just, hey, let's make sure that we protect ourselves. Whether you place a stop or you buy protected puts is up to you. But the one thing is either you get out of this trade because it seems like money is not flowing in anymore, or you protect yourself. And to me, this is one of the best things ever. I don't have to sit down there and guess, hope, and wish. I can just say, what is the, objective data telling me? What is it telling me? All right. What is the real factual data just showing? Because they can tell us, oh, everything is fine while money is flowing out. And that's what I saw happening with a lot of people in the cryptocurrencies. Oh, just keep on buying cryptos as they start losing 30, 40, 50%. Keep on buying. And some of them went down 90%. Keep on buying. Now is a great time to buy while it's down 97%. And it's like, let's not make those type of mistakes. I know the lure is, oh, if you buy it now, that's down 97%. All it needs to do is pop, 10%, and you'll be making a whole lot of money. I get that. But at the same time, we're talking about long-term investing. It's like we need these things to turn around long-term. I hear some people say, hey, I'm buying Facebook right now because they're going to be going through, the feds have been giving them a hard time and all this kind of stuff is happening. But in 10 years from now, they're going to be fine. So it's time to start buying. And I said, well, what if it takes them 9 years before they move? And then on the 10th year, it finally starts moving. Technically, you were correct, but it's like 9 years wasted. What if we can improve that process? What if we can improve that process by saying, okay, you know what? I do like Facebook. I don't mind getting into Facebook, but let me wait until I see that it's really, I don't mean these 1 day pops or 1 week pop that is only going to last for 1 week and then it starts heading back down again. We're talking about like when the real bullish trend begins, where once it starts, it doesn't look back anymore. Why don't we just wait for that instead, rather than dollar cost averaging and hoping that things would get back? Because part of the issue is that what if it never comes back? What if they actually go bankrupt, right? So what I like about understanding the data that tells us what to be paying attention to is we don't have to guess anymore. We can tell when we should be doing something or not. Right here told us to exit our long positions. I mean, play stops. It's like almost as if it's warning us 1 month, 2 months, 3 months, 4 months, 5 months, just warning us 6 months, getting short. It's like begging you, getting short or place your stop, getting short or place your stop. And then finally, you know what? It's time to short this thing. This is in December, right? And people were still holding on, hoping that it's going to do well again and it's going to live its glory days. And I was one of those people that was hoping for the best for this particular stock. But unfortunately, data was saying no. So at this point in time, once the background changed from green to red, we know things are not looking well. And this is how we stay on the right side. No guessing, no hoping, no wishing. It's just pure data. The last example I'm going to show before we move on, because we don't have that much time, is, again, here's Alibaba. I remember when the Chinese government decided that they were going to start, telling these Chinese tech stocks to leave America and come back to Hong Kong and stuff like that. And I literally saw people out there saying, hey, the shares have dropped. Now it's time to go buy. It's going to bounce back. It's going to bounce back. And I was like, okay, I understand that logic of buying the dips, but right now, what it's telling us to do is get in shorter, get out, exit, place stops in your long positions, get in shorter, get out. And it's telling us all these things until finally it says, look, they're not buying these things. And so I always question the people who are then saying, or whoever is telling you, hey, I see this doing well, now it's time to buy. I own a share of this, say, so I'm into it. Well, yeah, they might own one share of this, but they're not really fully invested in stuff like this. And then so they telling us to go out there and buy it while the stock is doing what? Going down, right? And so now they say, oh, now it's time to buy. Now it's time to buy. And look at what it's telling us. Look, exit your long positions for now. So yesterday might do well. Yesterday might have done well. This week might do well. Next week might do well. But the thing is, I don't want to jump in just because we had one good week. I don't want to jump in just because we had one good day. Anybody who's been trading this past 2-3 weeks, we've seen that. Market does well one day. 2 days later, it goes back down. 3 days later, it's back up. 2 days later, it's back down. People are wondering, what is going on? Well, part of that is because you're not seeing the big picture. Big picture here is just showing nothing's really changed yet. Be patient. Let's wait. If this market is really going to turn bullish, trust me, you will have plenty of time to get back in the bullish side. Plenty of time if you're a long-term investor, which is what today is all about. Which is why I said when I saw this, I was like, yes, finally, somebody who sees it, the market the way I see the market. It's so much easier for me that way. I don't have to worry about what's going on each and every day because I can see the big picture. People say, are you buying right now? Not yet, because I want to wait until I see the data that tells me it's okay to start buying. All right. So that's the first tool that we use. The second thing is this tool right here. It's our tracker. Okay. And with this tracker, let me see if I can bring this tracker over. This tracker right here helps us in the sense that once we short a stock, now this tracker right here is the short selling. So whenever we're ready to short all the stocks that we short, we enter this. Now this is just a sample. So this is not my own personal tracker or anything like that. But this is just a sample of stocks that we've recommended in the past saying, hey guys, it's time to do something with this, blah, 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 blah. And what it does is like, once we see based on what the Brightside platform told us on the monthly chart, it gives us a sell signal, you start shorting. But the thing is, how do you manage this? I mean, I understand it's long-term. Do we just short or buy a stock and then come back 6 months from now, come back a year from now? Not necessarily, because I always had that concern. It's like, what if I come back 6 months from now and something horribly went wrong the month after I got involved in this? That's possible. So I don't want to wait to the end of the week or end of the year, or the end of 6 months to find out that, hey, things are not looking good. And so for that reason, we created this tracker, which allows us to be able to track how each stock in our portfolio is performing so we know what to do. Now, let me just run through this very quickly because, again, we don't have that much time, but I just kind of give you the gist of it. Hopefully, you guys can see this screen right here. It's not too small. Let me see if I can make it a little bit bigger. Let's see here. Let's see if I can make this a little bit bigger. Okay. All right. Hopefully, you guys can see this. So let me just take a few examples. First things first is we enter the ticker symbol, right? And by the way, all this is going to be available to you once you sign up with any of the offers that we have to offer you. Then you enter the date that you actually shorted the stock. You enter the price that you shorted it on. And then one of the things we try to encourage people is to say, look, on a quarterly basis, how much are you looking for? You can change that number to whatever you want. For us, it's 15%. If we can make 5% a month, we're happy. That's on the low end. If anything over that, that's extra. Okay. And then there are certain strategies that we teach. In this case, this is just a sell signal, which is what you saw on some of these platforms, on the right side platform. So maybe that's where you got it from. We have a strategy we teach on earnings. We have strategy we teach on seasonality. So it all depends on what the strategy is. And the reason why we put that in there is so that we remember why we entered this trade, right? And then we also teach you how to see, hey, approximately how long do you expect to be in a trade? Okay. And then that's kind of like what this is. And then finally, what time frame are you trading on? You're trading on daily time frame, weekly time frame, monthly time frame. All that is important in order for you to do well long-term investing, because you need to know what you're doing. Then the next thing is, hey, if I expect to be in a trade 37 days, this section right here tells us how long you've actually been in a trade. And typically we have it where once you're in a trade more than a quarter, right? Because again, we're looking for quarterly goals. Once you're in more than a quarter, it will turn red. So if you haven't been in a trade more than a quarter, it will stay green. And all that just tells us is like, look, are you overextending your stay? Are you holding on to a stock that you're not supposed to hold on to? If there's anybody who's ever held onto a stock where you expected it to do one thing, but it didn't. And so you held on, hoping that it's going to reverse back, hoping it's going to reverse back. Before you know it, a whole year's passed you by, 2 years passed you by, and you're still holding on to this stock and it's just doing worse and worse and worse and worse and worse. Well, that's what this is supposed to do, okay? Because one of the things I do is, because I teach my kids how to trade the stock market, one of the things I tell my wife, I say, hey, you should be able to come, I can give her this tracker and say, take a look at this. And in the event that I'm not doing what I'm supposed to do, which is get out of certain trades, I say, I want you to be able to execute this and go out there and do what needs to be done. And then I can have my kids look at them and look at my wife and say, hey, mom, why are we still holding on to this red stock right here? To ask those questions. And when I say red stock, just because the duration is long. But the idea is that your kids should be able to supervise your spouse who is able to actually implement your trading strategy. If you have something like that, you have a system. You have a system, and that's what we teach you to do. And we also give you these tools so it makes it easy for you to create these systems. Long story short, we've been in this trade 116 days. The question is, should we be in there or should we not? Well, based on this 116 days, here's the goal tracker. This tells us where you should be by now. So even if you were holding on to this 116 days, this tracker tells you that you should be up 19% at this stage. Here is where your true returns are. You're up 62. So you're doing better than where you are. So the question is, should you sell just because you've hit your target? Or are you able to hold on to stocks to let them keep on growing? And that's the idea behind this as well. And so right here, you'll see where it says, does it meet expectation? Yes, that's what you see in green. So everyone in green right here tells us that we are meeting expectations. And then over here it says, are you underperforming or overperforming? And you can see how well you're doing, right? Whether you overperforming, underperforming. In this case, 43%, you're more than overperforming. You have room for this stock to do a lot of stuff. And then last but not least is this weekly right model, which is where every weekend, I tell people, we're weekend traders. Every weekend, go in and just maintain it. It's almost like being a real estate investor. You own properties, and as a property, after you own the property and you're renting it out, try to do some weekly, property management on these. And that's what this is. And it's a very simple thing. You just go to the right side platform, figure out what the right model is saying for that day, and then just follow what it says there. And that's it. And then whatever it says, like let's say it's getting short or get out, well, then go protect yourself. That's what it's telling you. Wait on hold. Oh, you have nothing to worry about. Just leave it like that. It says long stop. Make sure that you have your long stops in place. And that's pretty much what it does. But we go into more details on how to use this and all the nuances behind this so you can understand that. And that really helps a lot. Because the other thing that it does is, if you scroll down a little bit, it starts showing you which stocks you own in your portfolio that are really hurting your portfolio. So that way, again, you don't want to wait 6 months down the road and find out that, hey, all this money I thought I was making, now I find out I didn't make any money. Or you come back at the end of the year and it's like, man, I was making money. I was making a lot of money in the beginning, the first quarter, second quarter, I was making a lot of money, but then I lost it all, right? If you ever had to go through that or that ever happened to you, then chances are you need a platform and a tracker like these, okay? Because that's what all this is meant to help you overcome, right? And so in this case, you see here where it says we have a red and a yellow. Well, that's what it's supposed to be. Some of you might be technical. Oh, that's not red, that's salmon. Okay, that's not yellow, that's green. Okay, but the idea is red and yellow rather than green. It's not green, that's for sure. All right. And in this case, the whole red section here tells you something is wrong. And then these right here is telling you you are making money, but you're losing more of your profits now. So take a look at this. This is a stock that's making 6% return on its money right now. This stock is making 6% right now, right? But you are beginning to lose. You lost about 0.5% of that 6% already. And that's kind of like what's happening here. And if you don't, and right now it's saying, look, you're not meeting expectations anymore. You're supposed to be up 6.67% in the 40 days that you've been in this trade. You're actually behind schedule. If you keep that up, you start eating into the profits that you made, and then you find out that, hey, your account didn't really grow for the year. And that's what this helps you to do. And then it goes even worse and worse and worse. So in this case, even though this stock is up 16%, and you might have that in your portfolio thinking, oh, I'm doing good. I'm up 16%. It's like, wait a second, you really are supposed to be up 20% in this portfolio, right? And it's just a quick glance. It's just a very quick glance. I don't have to recalculate everything over and over and over. You're really supposed to be up 20%, but you're losing almost 4% of that already, right? And so now it's either the stock is not performing as much, or maybe it overperformed it, but now it's losing money. So if you think about like what happened with people when they owned GameStop and how the stock shot up really big, maybe 100%, 200%, people say, hey, I'm gonna hold on. And it goes from 100 down to 90, down to 80, to 60, to 50. You say, okay, let me just hold on. And next thing you know, down to 40 and 10. And then now you're back in the negative again. It's like, oh man, I was at 100%. Now I'm down negative, or I'm break even again. Man, that's a bummer. I wish I had taken my profit earlier. Well, that's what this is supposed to help you do. To see that, look, when you were at 100% and it came down to 90, it's like you're not meeting expectations anymore. Or maybe it did drop down to 90 and you're still fine. But at some point, it's that this is not meeting your expectations anymore. even though you're still profitable at 70%, you need to get out. You need to take your profits and run, because what's going to end up happening is if you don't, you run the risk of losing it all. That's what this does. A great example would be this one, Lennar Homes right here, where we have two reds. This right here is just telling you, get out. A double red here just tells you, look, you're losing too much. At this state, now, interesting enough, it's still up 1.76%, but that tells you you have waited way too long. It went from double green, where you were making good money, to like warning you red and yellow, to like now it's saying, please get out. I mean, we try to put a lot of things in there to make sure that we're not guessing, and we can hold on to trades as long as we need to, but cut them loose if they start having problems along the way. Because chances are they all will run into problems along the way. But this is how we're able to get rid of the ones that don't do well and hold on to the ones that do well. Okay. Those are the two tools that we use to help us. And, this is something that we have been using for a long time now, help us to stay on the right side. We don't stress out. We don't worry about things. We don't have to worry about the news or anything like that, because we have tools that can help us do the job a lot more efficiently. So like I said, I have something to offer you guys, because again, there's a lot. I mean, you can see that I was rushing through all this stuff. There's so much that I can offer you guys, but here's what I'm going to do. We have a whole 6-week training program. It's 6 weeks, but it's weekends only, Saturdays only, from 10 a.m. Eastern time to 12 p.m. Eastern time. I would like to invite you there, because there I can take my time to really show you how to use these things. You guys can ask questions. You can see how this really works. You can really, really apply this and really transform. I say transform the way you trade, transform your approach to the stock market, not just, oh, I made some good money 1 week or something like that. Okay. Here's what some people have said. Look, excellent 6 weeks with you, Wally. Thanks. This course is like the holy grail of investing in the stock market. This lady said, look, you have no idea how phenomenal this whole thing is. My mind is blown away. I'm really impressed, and not many people impresses me. So those are people who have taken these courses like, wow, this is amazing. What are you going to learn in this course? I'm going to show you how to see the tops, even without the platform, so that if you're thinking, well, I don't want to just do it by the platform alone, I'm going to show you how to do that manually. Okay. And then use a platform, which makes it easy. It's almost like learning how to do long division and then using a calculator to do it. So either way, whether you have a platform or you don't, you know how to tell these topping patterns. Remember the topping patterns that I saw in the market early in January, right? Right before it crashed. Like, how did I know? When I say, hey, 4 to 9 months easily. Cryptocurrency has already been down for at least since January to now. That's 6 months, going on the 7th month now. And I said 4 to 9 months. What are the things that we saw that would have told us that? These are the kind of things that we'll share with you, so you can learn and see this with your own 2 eyes. If you talk about Lehman Brothers, how would you have been able to see that Lehman Brothers was going to go bankrupt, or at least it was topping out, and say, get out, get out, get out, or Bear Stearns? Literally, these are not, things that, oh, it just happened and nobody would have seen this happen, right? These are literally things that you can learn to identify with your own 2 eyes. I promise you, you will see with your own 2 eyes. You don't have to rely on anybody. You don't even have to rely on me to see that anymore. You can see with your own 2 eyes and say, yep, there it is right there. Okay. And then you'll see what happened. What else do you need? Okay. I'm going to show you also in this 6-week program, one of our most profitable strategies, which is IPOs. Now, some people don't like IPOs. I get it. But the way we approach IPOs is completely different. So much so I used to tell people, I said, look, I'll show you this method of how we can tell which IPO stocks are going to double, triple, quadruple, or more in price. So much so that if you know anybody that has shown you this same strategy that I discovered prior to me doing this, which is, I think, I want to say 2016, August 2016, anybody that showed you exact same thing I'm going to show you here before August 2016, I will refund your money back. I will refund your money back, because I have not seen, even till today, anybody show you how you can tell. You ever seen like those people that say, hey, if you invested in Facebook when it went public, this is how much money you'll have today? I'll show you how you can see those things, so that you don't get involved in the ones that are not going to do well. Okay. So companies like, say, this stock right here, Blue Apron, where everybody, oh yeah, we're gonna make so much money. And I was like, no, you're not gonna make money. We saw these, and it's like the data doesn't show that. What are the data? I promise you, you come here and I will show you how to see this thing lift. A quick story: I had a guy who literally rushed into my office because he was, referred to me and said, "Hey, I need your help. I need your help. I need to make $200,000, in 2 weeks, because basically I owe this money," is what he said. Long story short, I said, well, what happened? He said, well, I thought, Lyft came out with, IPO. I thought if I invested in Lyft, I could double my money very quickly, and it didn't. So now I owe this money and I need to make that money back. And so I need you to show me what stock I need to jump into that's going to help me make that money back in 2 weeks. And I was like, yeah, that's not how it works, dude. I'm sorry, but I wish you had came to me earlier, because I would have told you Lyft was not the company to get involved in. Okay. And the only reason why he jumped into Lyft, because like Lyft was literally going IPO that week, and he had heard all the news about how, everybody's hyping up Lyft, 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 Lyft. You can make a fortune off of this, but it didn't. So I will show you how to stay away. Literally, it's not guessing. I mean, you can see the data, and it's so clear when you're able to see that. And so when you come to the 6-week coaching program, part of what I strive to make sure that people walk away with is, you don't have to guess anymore. You don't have to fear missing out on trades. No more hindsight trading. You don't have to worry about Fed uncertainty. Like when all the Feds came out with all this stuff recently, it's like, it doesn't bother. We know what side of the market to be on. Concerns about volatility, out the door. Fears about bear market, completely eradicated. Worries about recession, unless you're just worried about other people in your family, you would know what to do when it comes to recession, because you see it. I mean, I'll show you, we did studies on recessions and bear markets, and I'll show you how you can see it. I can show you exactly when it ends. Like I'm talking about to the month. When the month is over, say, yep, this month is over. It is now over. Recession is over. Without guessing, you can see it. And that's why I said, even right now with the bounce, it's like we don't see that yet. And so that's what I'm saying. Look, I don't doubt that we can have some type of relief rally, but to say that it's over, it's not, because we don't see that yet. Wouldn't that be nice, so you can see with your own two eyes? I don't have to listen to anybody on media to show me when it's over, because you'll be able to see it yourself. And so much more, and so much more. Okay. The confidence grows, just like this person, Charlie, says this. I can look at any stock now, and I feel very confident what I should be doing and what I should not be doing, especially when it comes to positioning. That peace of mind alone is worth it. Okay. This is what Bruce said. Very enlightening many months with you. Now I'm confident to continue with all the lessons I have. See, that's one of the things we try to get people to go solo. I don't want you dependent on me. Go solo. Learn these things. Teach this to your kids. Teach it to your grandchildren, like I'm doing with my kids, so that they can grow up and it becomes second nature to them. But the thing is, you can find what's happening out there. Here's an outline of that 6th week. The first week, we talk about the foundations of navigating the market successfully. I go into very simple steps, 4 steps that you have to go through. If you pass these 4 steps, you never have to worry whether a stock is bullish or bearish, ever, ever. Then we talk about the next week about identifying bottoms. This is huge. This is huge because we hear about the bubble. They scare us. The fear is there, but very rarely do you hear people talking about the bottom. And then when the bottom comes, it's more uncertainty. Is it the bottom? Is it not the bottom? Is it the bottom? Is it not the bottom? Kind of like what we're doing right now. Have we hit the bottom? Is the market really ready to rally? Is it not really ready to rally? Are we really back into the bullish market? Should we be buying? Should we not be buying? And you kind of like wondering back and forth, back and forth. It's like, guys, it doesn't have to be that way. There are very clear signs that can show you when it's done. How do you buy low and sell high? Isn't that the whole principle about any business, buying low, selling high? That's kind of like what we teach in week 3. Then I talk about market cycles. When market tops out, when market bottoms, so you already can see this ahead of time. We talk about seasonality, earnings season, one of the best times to be investing in the market, earnings season. And we don't buy stocks the day before earnings hoping for a pop. I'll show you how you can have more consistent returns on earnings. Okay, more consistent returns on earnings where I never have to worry about whether stock pops or not. And we're not talking about even trading options at all. This is not options hedging ourselves. It's like there are certain things that you can see When a company comes up with earnings, it's yep, this is going up. And when it comes out, nope, this is not going up. Okay. And then we'll talk about IPOs and then growing your portfolio. This is the website you can go to. We typically charge $9,997 for this. But because everybody's been going through a rough time through this whole bearish market, I honestly just say, look, I think it's only good of me to kind of like reduce the price to help people, because honestly, I think that there's so many people who are hurting right now. So many people who are hurting right now is that you don't have to do that. So we're reducing the price to 1,500. Okay, 6 weeks, come in there, 1,500. Now, I'm going to give you guys some bonuses. So pay attention to these bonuses because it's going to matter. All right. And then at the end, you'll see even one more thing. I'm going to just skip through this. Here's the first bonus right here. I will give you my candlesticks. There are 6 candlesticks, actually 7 now. I'll give you the 7 candlesticks and my PDF cheat sheets on how to read candlesticks. Okay, to me, candlesticks is like the alphabets of trading. You know, if you want to learn how to speak a certain language, you want to know the alphabets. I will show you just 7. That's all you need to know in this day and age. That's 7. That's all you need to know. You immediately get this because these are recorded. You immediately get this. You get the PDF. Master that. That's what I urge people to do. If you can master these 7s, you would do well. You can use this on any time frame. You can use it on stocks, futures, cryptocurrencies, and also I'll show you my 5 personal steps before I even buy anything. Okay. Here's what one person has to say, man, you're the best chartist. Everything that's happening, I saw this before. Okay. The IPO, I'll give you my video on IPO. And then when you come to the 6th week, I'll go into more details, but at least you can have this and start looking at, hey, I know how to identify this. And here's the reason why, because once this market hits bottom and is ready to go up, you definitely want to be paying attention to some of these IPOs that are going to be coming out then, right? And even the ones that already came out before, but are now ready to really grow. It's important to know that. I'm also going to give you guys my VIX volatility trade, which is so important. So this is one of the reasons why we don't worry about volatility. All right. And so if you're ever the type of person like, man, this is scary, I don't know, VIX spike, VIX then spike, I don't know what to do. I can show you how to tell when VIX is ready to spike, like literally to the day, maybe one day before, right? When VIX is about to spike. And when the spike is over, that's huge. When the spike is over and the market is ready to start trading again, huge to be able to do this. This is what this person said when he got that video. He said, if I understand what you teach in your VIX video, we should see a downturn in the VIX, which would indicate that the market will rise. This was on December 26th. Remember how I said we called the December 26th bottom? Okay, and that was at 9:50 a.m. December 26, 2018, 9:50 a.m. That was when that happened. This is what the chart looked like on that day at 9:50 a.m. Okay, when he sent me, he said, wait a second, market just opened. It's 20 minutes into the market opening. And everything you talked about, I just literally finished watching this and I see this happening right now. So if that's the case, are we saying that the market is ready to go higher? And I'm like, yep, market's ready to go higher. This is what the market ended up doing. Okay. So again, how is it that over here, he saw data that turned into this? This is what you get when you watch that VIX video. So I'm going to give you that. Short selling secret, another bonus that I'm going to throw in here for you guys, okay? Because I want you guys to learn. If you have this information, you can stay on the right side. How to tell the topping patterns that helped us to see the topping patterns that we saw when the Bitcoin was getting ready to crash, the ones that we saw when the market had topped out and say, look, get ready for this. I'm just going to fast forward. I'm also going to give you access to my platform for 6 months. Okay, you get bonus access to my platform for 6 months. I'm throwing that in there so that way you can use a platform to help you with your analysis. So once you understand these things for the next 6 months, you can actually use this to kind of help you with this, no extra charge. And then lastly, I'm also going to throw in 6 months of my report so that every week, not only are you doing your own analysis, you're looking at using the platform, but you also see how we're able to see what's going on in the market, talk about what's going on in the market, give you all these insight that you need to see going forward. Okay. So I said this 1,500, the extra. So this is the price, by the way. I mean, but for the first 10 people within the next 24 hours, you can get it for $9.97. So please take action like ASAP. Anybody who knows me, I don't play around with that stuff. $9.97 for anybody. The first 10 people. Once the first 10 people done, it goes back to the 1,500. Okay, so take action. Don't wait the whole 24 hours. Take action. Guys, you're going to get so much information. It is worth every single penny. Okay, and if you have any questions, you can always reach out to us at info@rightsideTrading.com. That's my time. I'm going to turn it back over to Dave. Dave, Anka, you guys are amazing. As always, thank you for letting me be on your show.